Wall Street time-lapse empty store fronts, flowing assembly lines, headlines flashing, GDP growth lines slows, unemployment ticks up, resilience risk ahead. Is the US economy heading into trouble? New government has shown the economy is losing steam, raising concerns that a mild resilience could be looming or already underway. According to the Commerce Department, the US gross domestic product, the broadest measure of economic activity, grew by just of 0.9% in Q2. That's a steep drop from the 2.3% growth in the first quarter and well below analyst expectations. GDP declined bar graphics with quarterly comparison economic reports being analyzed. What's behind the slowdown? Economists point to several converging factors. High interest rates, which are squeezing both consumers and businesses. Weaker consumer spending, especially on big-ticket items like cars and appliances. Sluggish manufacturing activity with factory orders failing for the third straight month and growing caution from investors and lenders amid global uncertainty. Fed Chair Jerome Powell at the press conference interest rate announcement visuals. All eyes are now on the Federal Reserve. Chair Jerome Powell has paused rate hikes for the second consecutive meetings, signaling caution as inflation trends downward but economic fragility grows. Chair Jerome Powell said that this week, "We are watching the data closely. We are not declaring victory over inflation, but we are also mindful of not tightening too much." Still, the Fed's benchmark rate remains at a 20-year high, which is cooling inflation but also trailing business investment and consumer credit. Footage of job seekers now hiring since coming down, graphs showing unemployment rise. Meanwhile, the labor market, long seen as the economic's backbone, is showing cracks. The national unemployment rate ticked up to 4.2% in July, the highest since early 2023. Job growth is slowing in retail, hospitality and tech, while wage increases have also flattened. And in some sectors, hiring freeze and selective layoff are back on the table. Economist roundtables debating soft landing versus mild resilience. So what does this all mean? Some analysts argue that the US may still achieve a soft landing where inflation cools without a full-blown resilience. Others want that the current data mirrors pre-resilience patterns seen before the 2001 and 2008 downturns. Harvard economist Jason Lee told CNBC, "This is not a collapse, but it's a clear sign that the economy is treading water, but big stock could tip us over." American at grocery stores, gas stations, apart complexes. For everyday Americans, the slowdown is already being felt. Grocery prices are still high, gas prices have dipped slightly but remain volatile. Housing affordability remains a challenge, especially as mortgage rates over near 6.9%, and with the 2026 midterm elections coming into view, both parties are gearing up to be blaming each other more for economic mistakes or to claim credit if a rebound happens. Factories, job interviews, Main Street businesses, Wall Street tickers. For now, the economy is not in crisis, but warning signs are there. The next few months will be critical if growth does not rebound and the job market keeps weakening. The US could be facing more than just a slowdown. Is the US headed for a resilience or just a cooling off period? Comment below and subscribe for more updates on the economy, labor and policy.